Hey, traders, video recording day over here. Nick, looking into Netflix. I just did a video on canopy growth as far as a lesson. Now, this is more a tangible trading opportunity. The question is always, how do I buy calls in Netflix? And Netflix has had a fantastic year. It's probably up like 50% year to date, 40%. Year to date. It's up definitely more than 50% since the bottom. So I can't stomach buying it. However, luckily, I did note the breakout here and the potential breakout here and here. And look, everything came to fruition. But look at all these open gaps below. No way on earth you would get me to follow a stock up here. I did say 380 was the target, but this is so close to the target after such a rip that I just can't start long here. And if I'm not trimming longs, I'm being a pig. All right, so that's not the point of this. The point of this is, what do I do now going into earnings? Netflix reports on Thursday. So here would be my strategy. If I'm still optimistic about Netflix, I would much rather buy into something else. You know, Amazon will move with Netflix, and Amazon is still frisky, and look at that. Amazon still has a bullish, look, I'm going to expand this. This is a neckline. It's not a hard line in the sand, but it could be. This could be something that looks like this. Okay, and it is doable. So, and the Netflix earnings could be the trigger. Now, the opposing note would be if Netflix disappoints, this then becomes the other scenario. And I'm just going to stop right here. Okay. So that's not the bottom, but I'm going to stop right here. So there are two scenarios in Amazon. So instead of doing Netflix, Thursday afternoon they report. So Friday morning, if I bought calls or puts, if I guessed wrong, at the open, my bet is zero, gone, trash. But Amazon doesn't report until later, February 4th, I'm guessing, ish. So the premiums in the Amazon bet will carry longer. Does that make sense? So there's always a premium for an earnings report. So when I buy the calls in Amazon or the puts, so instead of making my bet on Netflix, I would make it on Amazon. And now I'm talking upside only, because on the downside, I'm totally okay buying puts after a rip like that in Netflix. So I can specifically target Amazon because it will move with it. Any part of FANG will do it. Facebook will do it. Same concept. Okay, Facebook had a little mini up, but it could be in a breakout of its own. Okay, so right here, somewhere, there's a neckline, and you know there'll be a rally, failure probably around here, reload, failure around here, reload. Okay, so you see, these are the trajectory that I would expect in these guys. Now, I wouldn't do it in Apple. I wouldn't do it in Google. These are the two real momos in FANG. Netflix, Facebook, and Amazon. Google does not belong in FANG. Amazon, Netflix, and Facebook are momos. Google should not be, but it trades like one. Okay, so other than that, I would prefer to do the Qs. QQQ. Look at that. Same as what? Same as Amazon. Almost identical chart to Amazon. So I'm not being very accurate with my necklines, but you see the concept. Why am I zigzagging like this? Because I'm looking at prior price action, I'm just eyeballing it. This is potential resistance. This is potential resistance support somewhere around here. So, I'm not being messy, but this is how it would unfold. So this is a more proper neckline. What did I do here? This is I'm going to zoom in 240. Okay, so failure, somewhat of a failure. So now it looks like an inverse head and shoulder. This is the distance it has to rally higher. So from 148 to eyeball 115. So $10. It has $10 upside from the neckline. I'm just eyeballing it. Don't hit me saying, oh, you missed the neckline by $2. $9 to $10. There's a big rip off of this headline. Okay, so it could be already started. I don't know. We shall see. So instead of playing the Netflix, why not play the Qs, which I did. So how do I play it? I will buy the Qs out to March, at least February, and this is Netflix still. March, February, somewhere to get me to 170, 173. If I'm going out to March, I'll do the 173, no problem. I don't need it to get to 173. I just need it to come close to it or burst towards it fast. Then whatever I pay for these calls, boom, they will explode higher. Then I can sell them and book my profits. I can do call spreads, limit profit, but limit expense out of pocket. I can bite a few here and there, not to make it too much. So it all depends on the portfolio. If I don't have a lot of longs, this is a no-brainer for me to bet long on a good earnings season, hopefully started by Netflix. The bummer is that Netflix ran so much already. So what about a pair trade? Long the Qs, short Netflix. How do I short Netflix? With a cheap lottery ticket. I mean, that's a big gap. That's a big gap. That's a lot of fast money. So maybe they pop on the earnings and then revert lower. Has it done it before? What is this? Earnings pop. So maybe if you see a pop on earnings, buy puts immediately thereafter in Netflix. Leave the longs and the Qs. I don't know. I'm showing all the possibilities. I cannot condone buying calls in Netflix up here, even if I miss the rally. How can I not cry about it? I'll bet on something else that hasn't reported yet. Amazon would be one, or even a blanket Qs. I don't bet on Apple. I don't bet on Google. Maybe Amazon or Facebook would be the only two. So these are my thoughts. If you have any questions, let me know.